Namaskar, good morning. Reliance Industries Ltd, the country's number one industrial conglomerate, has released its result. We'll go through the result in a summarized form. We can't go through the result in its entire form. Reliance has got so many segments. Anyway, we'll go through it in a summarized form. We need to understand Reliance. Whether you invest in Reliance or not is a different thing, and of course, it is worth investing. Now, first let us see the annual performance analysis consolidated. FY19, that is annual FY19. Revenue is 6,22,809 crores. 6,22,809 crores compared to its previous year, FY18, of 4,30,731 crores. The improvement is a huge 44.6%. So, annual increase FY19 to FY18 is 44.6%. Now, PBDIT, profit before depreciation, interest and taxes, is 92,656 crores. Compared to FY18's PBDIT of 73,097 crores, the improvement in PBDIT over the year is 26.8%. Net profit has increased from 34,988 crores in FY18 to 39,588 crores in FY19. The improvement is 13.1%. Revenue increase is 44.6%, PBDIT increase is lesser at 26.8%, net profit is still less at 13.1%. Now, earnings per share is still less. The earnings per share is rupees 66.8 for FY19 and 60.9 for FY18. The improvement is 9.6% only. So, RIL has achieved a consolidated revenue of 6,22,809 crores, which is an increase of 44.6% over the previous year. Now, the increase in the revenue is primarily an account of higher realization for refining and petrochemical products. One of the major activities is refining and extraction of petrochemical products. So, there higher realization has happened, therefore revenue has increased. Now, there is also a 22% increase in the average Brent crude price on year-on-year basis. So, Brent crude price increase and also higher realization for refining and petrochemical products has contributed to higher revenue. Also, higher volumes are there due to stabilization of new petrochemical facilities. So, there is always expansion going on. Higher volumes have come. Now, the consolidated revenue was also improved on account of robust growth in retail and digital service business. Now, in the recent past, the improvement in retail and digital services is very high. Retail business and digital service business recorded an increase of 88.7% and 94.5% in revenue as compared to previous year. Retail business improved by 88.7%. Digital services, that is Jio, has improved by 94.5% in revenue. Now, exports, very impressive. Exports, including deemed exports from India, were higher at 2,24,391 crores. 2,24,391 crores as compared to 1,76,117 crores in the previous year. Operating profit increased by 30.8% on year-on-year basis to 83,918 crores. Compared to 64,176 crores in the previous year. Operating profit also increased by 30.8%. It's quite impressive for this scale. Now, volume growth in petrochemicals and rapidly increasing contribution from consumer businesses like retail and Jio led to a significant rise in the operating profit for the current year. Now, petrochemical EBIT margin was at an all-time high of 18.7%. So, petrochemical is becoming quite profitable. Its EBIT margin is 18.7%. Retail business profitability improved with a strong growth in revenues, benefiting from scale. The number of shops are also increasing, and the products are also increasing. Operating efficiency is also increasing. So, Reliance Retail is becoming highly profitable. Digital service, that is Jio, contributed significantly to the profits as Jio continues to maintain its strong customer traction with high quality network and unmatched value proposition. So, Jio is obviously number one now. Though others are trying to fight back, especially Airtel is trying to fight back, still Jio is continuing to be number one. Refining business contribution was lower. So, refinery was the major stay for Reliance Industries. That contribution from refining was lower, with crude prices being very volatile, weak light product cracks and subdued demand. So, for refinery products, subdued demand was there. Therefore, there the profitability has come down. Profit after tax is higher by 13.1% at 39,588 crores we have seen, as against 34,988 crores in previous year. Now, why is the revenue higher by around 40% and profit is higher only by 13.1%? So many reasons have contributed, especially refineries, etc. There is also higher interest charge. Profit after tax is mainly come down due to higher interest charges and depreciation due to stabilization of new projects. So, annual results we have seen, consolidated results. Now, latest Q4 results, consolidated, that also we will see now. Here, revenue is 1,54,110 crores. 1,54,110 crores is the revenue. Compared to the previous quarter, that is Q3 revenue of 1,70,709. Q3 revenue was more by 9.7% compared to Q4 latest. So, there is a degrowth in Q4 compared to Q3. But compared to Q4 of last year, there 1,29,120 crores was the revenue. So, that is more by 19.4%. So, revenue is less by 9.7% compared to previous quarter, more by 19.4% compared to Q4 of last year. Net profit is 10,362 crores compared to 10,251 crores in the previous quarter. Here there is no degrowth. There is a small growth of 1.1% in the net profit compared to previous quarter. And same quarter last year was 9,438 crores. So there is a growth of 9.8% compared to same quarter last year. 10,362 in this quarter, 10,251 previous quarter, 9,438 crores in same quarter last year, 1.1% growth compared to previous quarter, 9.8% growth compared to same quarter last year. Now, EPS in this quarter is 17.5 compared to 17.3 in the previous quarter and 15.9 in same quarter last year. Growth rates are same, 1.1% compared to say previous quarter, 9.7% compared to same quarter last year. So, to reiterate once, the quarterly revenue has increased by 19.4%, PBDIT has increased by 16.3%, profit before tax has increased by 4.6%, cash profit has increased by 6.1%. See, this is important. Cash profit is 16,349 crores. Very impressive. Net profit has increased by 9.8% to 10,362 crores. Cash profit is more than the net profit. That is also a very heartening thing. Now, let us look at the standalone also. That is, without the effect of the subsidiaries, if you look at that, the position is slightly different, because here refining takes the upper center stage, and refining has been subdued. Revenue has decreased by 0.3%. 0.3%, there is no decrease, it is flat. 90,648 is the latest revenue. Compared to Q4 of last year, there is a degrowth of 0.3%. Exports also decreased by 4.4%. PBDIT increased by 3.4%. Profit before tax has decreased by 4.8% to 11,331 crores. Cash profit has decreased by 5.9% to 11,651 crores. Net profit decreased by 1.6%. So, revenue, cash profit, net profit, PBT, everything has decreased on a standalone basis. Gross refining margin, that is GRM, that's what. So, GRM, that is gross refining margin, is at 8.2 per barrel for this Q4. Increase in revenue is primarily on account of strong growth in retail and digital services. So, if you take standalone, there is no increase, there is actually degrowth, but consolidated, if you take, there is an increase, good increase. That increase is therefore due to retail and digital services, which have grown. Retail has grown by 15.6% in this quarter, and 61.6% Geo has grown. Now, higher petrochemical volumes have also contributed to growth in revenue. Refining has come down, but petrochemicals, polymers, etc. have increased. Exports from RIL's India operations were lower by 4.4% in this quarter. 49,052 crores as against 51,295 crores in the corresponding period of last year. Q4 of last year was 51,295. Q4 of current year is 49,052 crores. So, mainly lower volume in refining business contributed to lower exports. Operating profit by other income, before other income and depreciation, increased by 12.7% to 20,832 crores from 18,477 crores. So, there is an operating profit increase of 12.7% in this quarter compared to last year, same quarter. The growth in operating profit was led by strong operating performance in petrochemicals, retail, digital service. See, petrochemical has performed well, retail has performed well, digital service also has performed well. What has not performed well is the refining business. That GRM has come down slightly. Significant volume growth and margin improvement in polyester chain has boosted the petrochemical segment earnings. Superior products and value proposition in retail and digital services is driving the customer traction profitability. See, petrochemical, that is polyester chain, polymer chain, that is going on well. Geo is going on well. Retail is going on well. What is not going on well, I again emphasize, is the refining business. Loan balances have increased. Reliance had to go for a lot of loans for different reasons. Therefore, finance cost has increased. Profit after tax has increased by 9.8% to 10,362 crores as against 9,438 crores in corresponding period of last year. So, this quarterly profit has increased more than 10,000 crores, 10,362 crores. Basic earnings per share for this quarter is 17.5 compared to 15.9 in the same quarter last year. Debt has increased. 2,18,763 crores was debt in last year same quarter, 31st March 2018. Now 2,87,505 crores. Look at that. 2,18,000 crores last year, 2,87,000 crores current year. So more than 70,000 crores debt has increased. Of course, cash and cash equivalent latest stand at 1,33,027 crores compared to 78,063 crores as on 31st March last year. So 1,33,000 cash and cash equivalent compared to 78,000 crores last year. Capital expenditure during this quarter was 32,665 crores. So, in addition to the above, the press release says movement in gross block is on account of demerger or slump sale of fiber and tower assets and ethane ships. Now, some other highlights are Alok Industries. A company is being acquired by Reliance. Reliance has also completed acquisition of 100% stake in another company called Radicis Corporation. It has entered into an MOU with NMSEZ to sublease about 4,000 acres along with associated development rights subject to fulfillment of certain conditions. So 4,000 crores it is subleasing from NMSEZ. Then it is acquiring a company called Reverie Language Technologies and also C Square Info Solutions Private Limited and also Grab Services Private Limited and also Sankhya Sutra Labs Private Limited and also Surajya Services Private Limited. So like that, many companies, small companies, very small companies are being acquired. Then India Infrastructure Trust set up by Brookfield as a sponsor and 90% investor will invest 13,000 crores to acquire East-West Pipeline. InvIT will acquire 100% equity interest in Pipeline Infrastructure Private Limited, which currently owns and operates the pipeline. Now, Mukesh Ambani has said Reliance Retail has crossed 1 lakh revenue milestone. Reliance Retail is performing wonderfully. Jio is now serving over 300 million customers. So like that. Now there is a refining and marketing business. That is also there is a slump. Yeah, there is a decrease. So FY19 revenue from refining and marketing segment increased by 28% year on year, primarily on account of higher crude prices. GRM margins stood at 9.2 per barrel, outperforming the Singapore complex margins by 4.3 per barrel. But the fourth quarter revenue from refine and marketing segment decreased by 6.1% year on year. Now, petrochemical business, there is no problem. Revenue has increased by 37.3%, subject to 37.3%. Strong integrated polyester chain margins offset the weakness across the polymer chain. Revenue in petrochemical segment increased by 11.3% in the fourth quarter. Then, another weak segment is oil and gas exploration or production business. The segment revenue is 1,069 crores compared to 1,182 crores in previous quarter, 746 crores in same quarter last year. So revenues have decreased by FY19 revenues. Now if you leave aside the quarterly revenues, FY19 revenues have come down by 3.8% year on year to 5,005 crores in oil and gas exploration and production business. Volumes from the conventional fields and US shale were both lower on account of natural decline and slowdown in development activity. So the segment performance continues to be impacted by declining volumes. Domestic production was also lower, whereas production in US shale operations has also declined. Domestic has declined by 32% and US shale operations have declined by 35%. So oil and gas exploration business is down. Now organized retail business that has given a record-breaking performance. Segment revenues has increased by for FY19 for the whole year 88.7%. There is an increase to 1,30,566 crores. The retail area under operation grew by 24.2% to 22 million square foot. Then media business. Reliance had acquired a Network 18 media some time ago. The revenues are 1,231 crores only due to a higher base on account of Padmavat film last year. The fourth quarter film revenues dropped by 7% year on year, led by flux around implementation of the new tariff order and some live entertainment projects and the union budget coverage in the base quarter, so and so. So, so this entertainment, media, etc., there is a problem. There is a temporary problem, but it is growing. It is likely to grow. Then regional news gestation losses are there. So some teething problems are there in maintaining this media. Then the next one is the digital services business, that is Jio. So standalone revenue from operations of there is a 7% quarter on quarter growth. Subscriber base has increased to 306.7 million. Lowest churn in the industry, 0.75%. Then standalone net profit for Jio is 840 crores. ARPU is 126.2 per subscriber per month. Total wireless data traffic during the quarter was 956 crore GB. Voice traffic is 72,414 crore minutes. Consolidated value of services is 13,609 crores. There is a growth of 10.6% quarter on quarter. So subscriber growth is there. Net addition during the quarter is 26.6 million. So monthly churn is much below the industry average of 0.75%. Customer engagement is healthy with average data consumption per user per month is 10.9 GB. Average voice consumption is 823 minutes per user per month. Video consumption drove most of the usage, increasing to over 500 crore hours per month. So like that, Jio is doing very well. World's largest VoLTE network witnessed 95% year-on-year growth in daily voice traffic with best-in-class network experience. It is ranked as the fastest network for the last 25 months consecutively by Troy's MySpeed Analytics app. So, Jio is going on very well. Now, see, there is a lot to talk about Reliance, but suffice it to say that it is refining business is the refining business, media business. These are the two drags, but they will pick up. Refining business will be depending upon international factors. Media business will pick up slowly, depending upon the management efficiency and competence only. Reliance Retail will be going on increasing. Reliance Jio will be going on increasing. Petrochemical business will be going on increasing. So, future is bright. See, Reliance, now Mukesh Ambani is probably the fifth richest man in the world. He will become richer and richer and richer. We congratulate him for all his achievements. But I do not know whether he will separate the two big businesses, Geo and retail, at some point of time. So let us wait and see. It is of course worth having a small chunk of Reliance can be there with every investor in India. Thank you for listening. I will be back with you with another very good company. Thank you.